Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the midweek natural gas report, the new spot September contract is down, currently trading 303.20, down 11 cents or 3.5%. As you can see from this chart from barchart.com, prices are now approaching the lows we set for this particular contract all the way back in November 4th of last year. Let's take a look at the hourly chart again for September now, which is the spot. And as you can see, we are through both first and second support on the pivots. And now we're close to the low support, the lowest pivot, which is 3.008. The RSI is in oversold condition. So we'll see if this can bounce a little bit here toward 305.40. But right now, weather is starting to moderate, which means the market is saying summer's over. So we're going to continue to search lower until we find more demand. And as you can see here from the front to back spreads, what does that mean? This is the Jan versus October spread. And this continues now back widening out over the last 3 days. Currently, right now, trading at 129.20, up 1.7 cents or 1.33%. As you can see, the RSI is trying to turn higher, which means we're going to go back potentially to test the 133.90 level. If we go much further than that, it will be out to 158.5. That would be pretty much a stretch at this point, unless we see some extreme weakness here from the weather. And let's turn to a new spread here, the front to back spreads. This is the Jan versus April contract. That's right. That's winter demand versus the first month of injection season. And as you can see here, this is using, again, tradingview.com. We come over here to our patterns and we're picking up this Elliott impulse wave, 1, 2, 3, 4, 5. And as you can see here, we've achieved that objective. Right now, prices are holding, but we are currently trading at 91.5, down 3.3 cents or 3.48%. This potentially means that we're bottoming on this particular pattern, because you can see here the RSI is converging with price, not diverging. And as you can see, we've hit that 1, 2, 3, 4, 5 objective, and potentially this spread will start to widen back out. Why is that? Market is still pricing in winter risk. And here's the temperature outlook for the 8 to 14 day. And as you can see, heat builds again through the upper Midwest, especially in the desert Southwest, and parts of California is also above normal. Here's the heat risk. Today, we've got about 10.2 million people under extreme heat risk across the Southeast. This dissipates as we get into the weekend. As you can see, tomorrow it's only 4.8, Friday 4.2. We start to get down to 2 million, and then it's a couple 100,000 before next week it starts to bounce potentially on Tuesday as the heat comes back in for parts of Florida and Texas. We'll keep keeping a careful eye on that as we get into next week, because the temperatures in Dallas for next week, midweek, are over 100 degrees. And here's the temperature anomalies for the extended week. As you can see here, it just takes us all the way through into the first week of August. This means it's cooler than normal across the upper Midwest into parts of New England, as well as the mid-Atlantic states. That flips the script the following week. And then also, again, a little bit more toward the west in weeks 2 and 3 as we get into August, fairly benign across the eastern part of the country. We'll see if this holds. What else is happening? The tropics. The tropics are starting to heat up. We've got tropical activity potentially around Florida and the southeast coast. And then as we get further into August, it's the mid-Atlantic that we're going to keep a careful eye on. So what's going on? As you can see, we've got some storm activity across the Florida, southeast Carolinas. And then this particular wave, we're keeping a careful eye on for further development. But what's causing it to potentially not develop? Again, the Saharan air layer or dust. This is developing right underneath it. And this is a particularly large wave. These arrows show you that it is heading toward Central America. So this may inhibit that storm from developing. Let's take a look at the stocks. In the oil and gas E&P sector, this is for market cap between $2 and $10 billion and a high short float. Even though crude oil prices are up, everything is pretty much down except for CNX, which did report good earnings the other day. We're waiting to see how CRK came in today, but as you can see, it is trading almost near unchanged around $21 per share. Everything else is down. Why? Well, there's some profit taking here. Typically in the equities, it's sell now in August and go away until the Santa Claus rally. So again, recapping here for the new spot September contract, prices are currently trading at 302.90, down 11.3 cents or 3.6%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.